Good evening, everyone. I'm doing a sound check and also hope you can hear me from the comfort of your home. So the webinar will be starting in about a minute's time. I'm just doing some sound check. If you can hear me, that's great. If not, you can just drop us a note on the chat. We'll try to fix for you as soon as possible, and hope you can see the screen showing the title for this evening. Hi, I'm doing a sound check, so I hope you can hear me clearly. I'll be starting about in a minute's time, and hope you also can see the title of the screen. All right, so thank you very much for joining us this evening in Unlocking Market Trends. I'll share with everyone a beginning's guide to starting to trade using trends. So a very warm welcome again. And myself, I'm Brendan. I'll be sharing with you tonight. I'm the presenter. For everyone who is new to me or to this webinar, myself, I'm a full-time senior trading representative with UOB Kay Hian. In the daily scope of my work, I actually work with clients, which includes from funds, trusts, high net worth to individuals on portfolio, advising and sharing on portfolios, and especially on entries and exits based on my technical analysis, sharing with clients in this area. So I hope to bring forth my experience and some of my work with my clients to incorporate to your portfolio and also your tactical or short-term trading this evening. And before I move on further, as usual, we have Q&A session at our pigeonhole.at. Following is our code 08JUL25. This is a QR code which you can take a screenshot, and I will also share it with everyone again at the later part of the ending of my webinar. So as usual, my only one condition is that everyone have a very relaxed time on your chair. If your dinner is fine, at your couch, just make yourself relax, take some notes, and I hope that it will incorporate, improve, or complement to your trading and investment. A very quick disclaimer before I start the session proper. So a lot of content here, especially near to the end, I have some directional views, and all this does not constitute to investment, trading, or financial advice. Solely, we are aiming at the focus of education. Right, so what is trend trading? And in fact, where should we look at trend? Because prices are everywhere, especially right now, every day on the news, we're looking at tariffs, probably a bit of Trump. So where is the stocks heading? And there's a lot of information coming in. However, as we know that every market participants, we have our view on the market. And when there's more buyers than sellers, we know that the price will be trading on the upside, which is uptrend. This is a trend where we want to identify and participate in. So I'll go back to a little bit of my basics today. The session will be broken up into 3 parts. The first part is just a very quick sharing on the basics of technical analysis. If you're a seasoned trader, I hope this is a refresher for you. And the middle part, we'll be talking about trend and what is trend trading. The final part, I'll be sharing with you on some of the examples and also the live examples in today's markets. Then we'll go into the Q&A session where we have a discussions. If you have like very urgent questions like to ask, you can actually just drop into the chat box. I will reply soon as finishing the earlier section. So coming back to trend trading, what we like to achieve. Before we talk about trend trading, we want to go back to the very basic, so we are all in the same starting point. Because the issue about technical analysis is that there are many trainers out there who share with everyone on their strategy, and straight away you or anyone who participate will learn about buy signal, sell signal, and did not know what's the reason that created this signal. Or at the end, one might not be able to even read a chart or identify where the trend is. Today, we go back a little bit to the basics, and we all have the same starting point on chart analysis. So the key thing, or the first thing about chart analysis, is about transaction. When there's a buyer and a seller, when we transact, there's a price. So when there's more buyers, there'll be more demand, generate demand, and the price would move higher. But how does that look on the chart? So this is candlesticks. If you have not come across candlestick, I'll just do a very quick summary on candlesticks. So on candlesticks, there's two types of candles, a green candle or a red candle. Sometimes you may see black or white. So white and green has the same meaning. It means that day or that session is a bullish session. We look at the first instance here. So the day opened at the bottom of the candle and it traded lower. This is called the low or the width of the candle. And at the end of the day, it closed higher, or it might actually test the day high before coming back. So the trading day will look like that. At 9 a.m. opened and it traded down, it traded higher, and it closed near to the high of the day. When it closed near to the high of the day, we see a green candle. Vice versa, if we open high and close low, price traded high and just get supply showing and showing throughout the day before it rebound a little bit and close near to the low of the day. This is called a bearish candle, a red candle, or a black candle. So moving on to trend, it also means that the more we see such green candles, it is a bullish trend. Because more demand, generally, we see more green candles because buyers are aggressive. They want to grab the stock because of certain news release or something that's actually developing. And this will form a trend. When we identify a trend as bullish, we should see more of these green candles. So this denotes that there are more buying actions. On the other hand, when there are more sellers, prices are being forced to go and close lower. In a downward trend or the bearish sentiment, we'll see more of such candles. Just a very quick recap. For beginners, I hope you can mentally fill in the blank. What is this? And what is the price here? What is this called? And what is this? Vice versa on the red candle. You can do a very quick mental fill in the blank. If you have done that, so this is the answer. I hope you got it correct. This is a bullish candle and this is a bearish candle. And coming to here, I think this is somewhat easy if you can get hold of what candlesticks is. So this translates to a bullish sentiment or a upward trend. And here will be a downward trend where the bearish sentiment actually dominates, similar to the period of Liberation Day, where every participant just clear off some of the chips off the table, taking profits before analyzing further. So for institutions, one of the things that they see uncertainty, they reduce their holdings without any further consideration. So this is why when bad news comes out, we are expected to see some selling. And after the analysis, digesting all the data, you see price coming back up when the analysis still supports the bullish trend. So now we got the basics. We go to the chart itself. And this is how a bullish trends look like. We see more green candles on your left. And on the middle, you see more green candles. Even price tries to move lower. You can see that they continues to trade within a certain range, not able to trade lower because there are demand pushing up, buying up when the price comes lower. This is a characteristics of a bullish trend. So you'll see more green candles, and when there's selling, the body or the trading session is much more smaller. Even though there's quite a large selling, but the next 2 days, immediately the buyers will come back in to buy back at lows. This is a characteristic again for bullish trend. On a vice versa, we look at the bearish trend. This is when the bearish trend is developing. So we start to see a lot of selling towards the end of the consolidation. And finally, once the price break lower, you see there's more and more red candles where the price open high and close low. So on the chart, you're able to see that we are on a downward trend. Sell off, even though there's a green candle. Quickly, the next 2 days, we see gaps and continue to sell off. This is a bearish trend. And when we know this is the trend structure. The more important thing is, so what does trend trading actually means? Because of the financial information coming into the financial markets, there's a lot of development before it is announced. Example, interest rates. We know that inflations continue to hit high. Before 3 or 4 months later, the central bank announced a high interest rate. So in between, when one sees a CPI data, we know that the Federal Reserve is going to act on it, and which is why price acted before the actual announcements. And because of the movement, if you are trading or investing in the daily charts, because of the growth, and which is the expansion of the economy and contractions. On the left-hand side, we see PMI against S&P 500. We use the US because they have a longer history. You can see PMI actually move in cycles. Because the central bank tried to stimulate and expand the economy, but when there's a sign of overheated, the central banks will come in to increase the interest rate and tighten the economy's liquidity, and at times create a recession or contraction. This is where the activities goes down. Similarly to the equities market, sometimes the effect could be stronger, sometimes the effect could be lighter, where we call it a soft landing. And when it translates to chart, it goes in cycles up and down. In technical terms, we call price coming down as markdown. And when the stock price starts to go in a sideways fashion, we call this potential accumulation, where the investors or traders understand that this price is a cheap, or it's really a bargain for a specific stock. They'll start to buying. And when the buyers are stronger than the seller, the price does not go lower, and in fact, it will start to break higher. So when the price starts to break higher, the analysts will start to come in to say that we expect earnings improvement because probably the central banks has actually cut rates or increased liquidity in the markets, or there's some fiscal policy taking action, just like China at the moment. And when the analyst starts to re-rate from a sell to a hold, and the earnings starts to prove it's correct, the price continue to move higher, we see more fund flows and better earnings. There are some newspaper reportings and some social media key opinion leader gurus saying that it's a buy. The price continues to hit higher until it's overheated. We see distribution coming in, where people who are very familiar with business will think that, okay, no, this is the price to earnings or the valuation is too high, I'm going to take profit. So when there's more sellers coming into the market and the demand starts to ease off, we will see a distribution, which means that there are more red candles coming, shown onto the chart before the price breaks lower, like we saw in the earlier chart. As trader or position trader, maybe semi-investor, where we want to position our allocation is on the markup or markdown. Yes, so it's very simply, we want to capture this part of the trend, the markup of the trend. So it also means that when we open up a chart, we want to have at least some clarity that where the stock price is. Is the stock price at accumulation, markdown, or markup? If the stock price has been beaten down, like a lot of the REITs, and now it's trading on a sideways, there's a good probability that they are in a accumulation, and we would like to position ourselves in the markup phase. As the interest rate probably ease off, the earnings of or the income of the REITs starts to improve. Or we may be looking at some of the bank stocks or some sectors that's benefiting in current situation that's trading in the markup. So we will want to position ourselves in it too, but in a level that is safe or lower risk for us to participate in the next leg of the markup. So in any case, we want to position ourselves when we are over here, transiting from accumulation to markup, or we want to be within the markup phase where the price takes a breather after a overbought condition. We would like to re-enter the stock near to the low, reduce the risk, and participate in the next leg up of a trend. Just like ST Engineering, maybe Singtel, and in Hong Kong's case is our Labubu, our Pop Mart. So this is where the first thing we want to note when we look at the chart, which stage are we? But how are we going to do that? It's not easy by using just the naked eye. So that is where the technical tools comes in. Before that, I just show you how it looks like in the chart. So this is the same chart I used on the first slide, but now I believe that it has more clarity. You'll be able to at least see that, hey, there's a distribution, price has went up and price came down, and the stock price went through a period of accumulation where the lows are getting higher because the demand is now more than the supply. But when coming down, the supply is more than demand. So once we know that, we are preparing ourselves for a potential markup phase. So the price may have the chance to continue to trade up or even higher. So now with the 4 phases, you would have a good feel of where the chart is, and we'll be using technical tools to help us further identify and confirm our observation. So at times, when you open up a chart, you try to look for these 4 phases, or you try to even find a phase, you can't do it. There's a small percentage of them. So it's fine, because they could be in a very long sideways trend. You can just leave the stock aside. But if you really, really love the stock, it's a company that the product that you use, and you think that they have a very strong potential, and what you can do is that you can adjust your trade position. You can still participate in the stock, but reduce your position until there's a clarity, and then you increase your position size according to your trading plan. So what are the tools that we usually use to identify a trend? So the tools that we usually use are trend line, moving average, single and dual, and also MACD, moving average convergence divergence, ATR, and Ichimoku cloud. These are some of the trend following tools in the technical analysis toolbox. There's over 300 and some self-made, over 400, 500 technical tools, but mainly they make up of a few categories: volatility-based, trend-based, or looking at the type of swing base like stochastics and RSI. Tonight we are looking and focusing on the trend following tools, which are the few that I've named here. And for the smarter ones tonight, you'll see that I saw that some of it is bold. Yes, it's the tools that we'll be learning tonight: the single moving average and the average true range. which I will make available to you shortly. So in the markup phase, what is our key objective? Our key objective as a trader, of course, if we can, is to get the lowest. But being a trend trader, we just like to capture and we aim to capture the majority of the trend. So there's identification of when the trend is starting, and there's a signal when the trend is exiting. So then we'll want to capture the trend. The reason why we do this is that when a stock price, example, goes through a distribution and starts to fall down, reach a certain point, you might say that, wow, this is like 40% off. I would like to take a position here. You can take a small position, but what's the risk? The risk is that it might becomes a falling knife where the price continues to fall lower. When someone thought it's low, it actually goes down even lower. So by having some levels of technical confirmation, so there's a bounce, and then we call it the first sign of strength, and the price tried to touch the earlier low but failed to go lower, and it bounced back up, breaking the resistance. So this is where a buy signal is. It tells us that there's a strong potential where demand is more than supply. And you can see that this is called a double bottom action, where it's tested and it breaks the resistance. So when the price starts to move higher, retrace, move higher, retrace, and realize that the price does not go higher and it breaks the support, this is where traders or our signal will inform us that it's time to exit the stock, because there's a probability that your profit will probably not diminish but minimize. So we want to capture the whole trend, because if we try to get the high, this might be the high, or this might be the high, the price might continue to move higher. We doesn't know. Similar to Sembcorp Industries, where it's at $4 is considered high, $5, $6, and now it's trading like $7. Reminds me of the price of a Keppel Corp. So we never know when the trend will end. So we like to make use of technical tools to identify or to trace the trend and follow the trend. But if you feel that strongly this is overvalued, position sizing wise, you may reduce in batches and leave the final batch or half of the batch trailing the trend of the stock. So now we know the objective is to capture the majority. We need to have a signal that tells us that there's a strong demand breakthrough, and it ends with a strong supply breakthrough. This is our signal to exit. So with that, we will then move on to the benefits of the trend. Before I does that, I thought it's good to just to show very quickly on some of the technical tools that I mentioned earlier. The green part is actually the Ichimoku cloud, and the one below is the MACD. Above the zero line is uptrend, below the zero line is actually downtrend, and the gray line, which is we are going to learn today, is the ATR, trailing stop, and we have the moving averages. So this is just a quick review of the trend tools. If you realize that most of them does the similar things depending on the stock's behavior. This is a very quick importance of trend trading, because it tells us the direction of the price. So we are not trading blindly or probably hoping. And then with a trend strategy, it could help us on our allocation strategy, like I mentioned earlier. Are we going to increase or are we going to reduce? So when we see there are signals of a strong trend, like in this case, the chart on our bottom right, we saw that the price breaks higher. We would like to increase our allocation. Probably this is this is actually the chart of STI, and of course, STI is always in our core portfolio. It's a matter of, for myself and my clients, when we are going to increase our allocation. When it's bearish, we will probably just reduce, and when we're bullish, we will add, but we always have a standard allocation into STI. When the trend goes stronger, we may even add our holdings when there's a consolidation and the outlook remains on expansionary or on a upward trend. So thirdly, it helps to reduce noise. The noise from the chart apart is mostly from the social media and from the news. As we know it, news are reported after something happened. So it's delayed. And if we take on the news, so we are taking an action that is slower than what is already happening on the market. So that actually, if the trend does not continue to move forward, it have a tendency for us to taking a slower action. And also there's brokers reports, sometimes single companies. Today I was just discussing with my clients, he was asking me, hey Brandon, so what's the outlook for this stock among all the banks rating? So for this particular stock, I was telling him that it's totally mixed. The target price is so wide apart where there's buy, sell, and hold costs all at the same time. It's simply telling us that everyone is neutral. So neutral, sometimes we also call it as nobody know what's going on. So, but in a better terms, in the analysis term, we call it neutral. So with a technical trend tool, it helps us to have some level of certainty, especially in this current market. If we are buying S27 ETF on the SGX, we continue to follow the trend of S&P 500, despite there's so much news coming in where Trump is hitting various countries with tariffs. Mr. Elon Musk is setting up his own political party. So there's a lot of news, but companies, corporate America is still doing well. So where are we at the moment? For investors like us, having a trend strategy help us to stay in our position. So something I like to share before I move on regarding to trend, this is something advanced. If you can understand, great, it's perfect. In case you can't comprehend too deeply what I've shared, do a print screen and slowly digest, or do look for me, come to my UOB office to just give me a call, or you can go to my websites or drop me an email. So why I put this trend movement and profit factor is very simply that a lot of times when we do trend trading, we've forgotten that we're doing trend trading. If a stock does not have any trend, how are we going to trade a trend? But for newer traders, it has a tendency that, oh, I'm not so sure. As long as there's a signal, I'm going to buy, and I think that the stock has a potential of moving higher. But the stock has been doing sideways for so many years. You can have a small position, but do not hope too much, because we look back at the previous historical trading prices to determine the future trends. However, it does not determine the performance, but it just helps us to understand the performance, help us to understand where the price is going. So if we see a price or a stock that is moving on the upward, we know that, or we have a stronger potential that your trend strategy will work. So if you look at some trading system, you can see that all or most of the examples are based on uptrend stocks, because the stocks are trading higher. We have a trend strategy so that to help us manage our risk and maximize our price and trade potential. That's all. If not, most of the trading tools work. Lastly, when we look at the downward trend stocks, some stocks just after IPO or after certain events, they just continue to go lower and lower. So if you like to include a trend strategy here, there may be some whipsaws here and there, and the price continue to trade lower. So always look at the chart, overall chart, to determine where or if the price is trading higher. The most preferred is upward trend, and the average preferred is sideways, and of course those stock that keep moving downward, we will want to see a solid accumulation area before we put in our position. So the next tip is that for trend trading, I will always do a dividend adjusted chart. I'll show you what is a dividend adjusted chart. So let me just off this. Dividend adjusted chart means that I will include dividends in my chart. So this is DBS. I hope you can see them. Of course, years of giving dividends, at times it's sideways, but when I include dividends into the price, you can see that the slopes are actually higher. The sloped angle is actually higher, so allow us to execute a trend trading strategy better compared to a unadjusted dividend where the slope is actually lower. So with that, we'll have a better probability of executing the strategy, higher success rate. We use technical analysis partly also because of the statistics reason behind. So when there are a lot of data points, which is the closing price, within a certain boundary, we can see that the direction of this data point are moving higher. But when the data point falls off the boundary, we know that some relationship has changed. The data is telling us differently that there's a potential price or direction change in the movement. So a change of technical signal such as a trend line breakout, a moving average breakout, or a MACD line crossover, we know that, or it gives us certain signal that the stock could be changing direction, especially if you are in the accumulation phase or a distribution phase. This is just to share with you why we make use of technical analysis, despite we do read into the fundamentals of the economy and the financial statements. So here are some assumptions and reason why trend trading is simple, but many did not actually see profits while using trend trading tool. Well, once you realize this, the probability of success trade is much more higher, because trend trading is quite a longer than usual strategy. A good holding period, it could be 1 or 2 months, sometimes may even 3 or 4 months. And unless you go down to a lower time frame, which means that your chart, I'll go to my chart, it's not a daily chart, it could be a 15 minutes chart, then your trading period, holding period could be a few days, but it's a lot of sessions for a 15 minutes chart. So with that, it costs those traders that wants a short-term trading of 1 to 2 or 3, 4 days to get whipsaw very easily, because they did not have this understanding, or they don't have this prerequisite that trend trading strategy actually could take weeks to even months. Next is that the probability of a trend trading strategy is not high, is at about 40 to 50%, so it's slightly less than half. But the profit factor usually comes in much more. So someone without this knowledge would think that, oh, I own 10 stocks, 8 of them will be doing well. But it's slightly on the reverse. Only 4 or 5 on the good times, there will be 6 that's doing well, but that 4 to 5 will provide you with a 2, 3, 4, or even 5 times returns to cover back not only the stop losses for that unsuccessful fall, but it will provide this consistent profit to cover enough for your portfolio to be in the green year after year. You should focus that the results is only 40%. Because of this, many to think that after a few tries, trend trading does not work and they give up. But after giving up, they see that their stocks move much more higher, and they try to come back in, and their whole trading strategy would turn a bit more like an emotional strategy. So knowing that trend trading strategy is a little bit longer and the success rate is lesser than swing trade, is about 40 to 50%. So with that in mind, if let's say you take a loss trade, it's fine. You think that the stock is continue to accumulate moving up in the markup, so you will take the next signal, the next breakout. So I've shared stocks with historical higher trending has a better probability. So those who did not take on these or select stocks or take on or select stocks that are downtrending will have a less favorable results. And for trend traders, we don't capture the exact top or the exact bottom if you can, using the averaging in method that I share with you. You capture maybe near to the bottom is fine, but most of the time we just want to capture the majority. So those who want to capture exact top and bottom will find it trend trading very challenging. So always analyze and then record your trades to see where you can improve, especially on the emotional part. So we like to participate into stocks that are well analyzed before we take it, not during the trading day. Likely there's an emotional trade. If you think that that's really, really good, again, reduce your stocks position and trade every signal seriously, thinking that this will be the next trade that provide you with 2 or 3 times a return of your usual profit. This is just a general rule. The shorter the time frame that you are trading, 1 minute, 5 minutes, which I used to trade it myself, use purely technicals. So the lower the time frame, there's more technicals. The higher the time frame, you will see that there's a good mix of technical and fundamental or economic information. So we're in a particular economic environment, we'll then use technical analysis to identify the trades that's in line with this economic or fundamental structure of the current economy. So having all these assumptions, I'll share with you our strategy tonight, which everybody is looking forward to. We first make use of 200 days moving average. It's a very common average, but why do we use this? Because during every markup, price is usually above 200. And when we, after tonight, know that when we look at the stock chart, we see which phase we are, then we apply 200 days moving average. This would provide 200 days moving average to be more meaningful rather than where every time we see a cross, it's a buy signal. Every time we see a cross below, it's a sell signal. So no, because the hardest part is that during the accumulation phase, the moving average will actually cut across all the prices before it trails the stop on the markup. So a lot of traders will actually got their losses in a sideways market. When you buy the stocks, go up a little and then it drop, and when you cut, the price go back in. So when we know that the stock is approximately in a accumulation phase, we will not be looking so thoroughly into the moving averages. We will be looking for signals on the breakout. Then we will apply the 200 days moving average. And then we'll be making use of ATR, trailing stop, to trade when during the markup. So when the price goes through accumulation and moves higher, because of the overbought condition, it at times retraces, demands come back in, price move back higher, it goes on, and the 200 days moving average comes in, cut the price, and move back up. So as a portfolio construction, you may allocate your funds into this particular stock upon the economic conditions is correct and there's a technical reasons, price cutting above the 200 days moving average. So this is where your core portfolio is. But in your satellite portfolio or when you're trading, we can take the short-term trades by using a tool that I like to introduce you tonight. It's called the average true range trading stop. This available on TradingView. If it's available on your broker's platform, is great. If not, you can actually log on to TradingView, take a snapshot or screenshot this QR code. You will lead to my page where I have the codes for this ATR. So you can save it into your TradingView indicator, which looks like this. Sorry, just give me a second. Okay. Very quickly, I just pull out the indicator, ATR, and also our moving average. I'll just adjust it to 200 days. I'm not promoting TradingView. It's just that it's a tool that I've been using it closest to Bloomberg in my office. So this is how it looks like once you have set up your chart. So I'll save it as our webinar version. Okay. So this is the gray line. The gray line is the ATR. You can take a snapshot and go through. I'll go through during this webinar and you can use it later. So here we can see that, for example, in this example, DBS, it is on trading on a markup. So we will take the price trading, tactical trading using the ATR. So how are we going to use ATR? I'll go back to my slide before we coming back to our chart. So the ATR is actually a trading range of the stock. It actually, earlier we see the candles, and each candles represent a trading, each candles represent a certain set of trading for that day. We will do an average of 5 days. There's a average trading resistance and support. There's a average high and average low, and then we multiply by about 3.5 times. This is how the gray line is developed. When the price is trending, this indicator will show the lower boundary of the trading range. And when the stocks trade below this trading range, the gray line will then switch to the top to become the indicator as a resistance indicator of this price. So it means that the price is trending lower, and this is the upper boundary. So when you see a uptrend, you see the gray line is below the price, and you see the gray line above the price, it means that it's on a downward trend. So when there's a switch like that from the bottom to top, it means that a technical or short-term bearish trend has occurred. Okay, so it's bearish, not bullish. But when we see the price from, here's clearer, the gray line switch to the bottom of the price, it means that there is a bullish trend occurring. It is also a signal for tactical trading. So here there's a few tactical trading. We look on our left, there was a switch and price fell. And during this accumulation phase, there was a switch and price was trending higher. That's where we can see the gray line is below the price. And in between this huge reaccumulation phase, the price switched again to downward trend before it switched higher on upward trend. And then near to end, there was a breakout where the price turned bullish and the ATR actually trailed the price upwards until it was exited here. So 200 days moving average to track the whole markup trend, and you can actually trade in between the markup phase. I hope you can get this. So we'll be coming up with a few examples. This is how the trade set up. The two tools that we use is ATR and moving average. We like to use moving average to quantify or filter stocks that are likely to be in the markup phase. And so this is the filter that I mentioned. And the setup will be we add our trading allocation. Once the price close above the upper boundary, means that it means that the stock break above the gray line, the upper boundary, and the gray line will switch to the bottom of the price. And once the price close lower than the lower boundary, we will exit. Like in this case, near to the end, where it break below the lower boundary is an exit signal. Similar to here is an exit signal. It means that the supply is strong enough to break even 3.5 times of the usual trading range. This is a very quick risk management of how much shares do I buy. I shared this on quite a few of my webinars. I just want to share it again. So this is your entry price at $1. So example, the price break above the gray ATR line at $1, you enter at $1. The stop loss or the lower boundary line is at 90 cents, which means that you are now having 10 cents, your 10 cents at risk. So if you have a 50,000 trading capital and every trade, you are only willing to risk $500. This 1% is quite a good start. As we trade further, you can see that your risk turns lower to 0.5. And we use this risk of $500 divided by, so this is your dollar at risk. So this is the price at risk, 10 cents. This is how many shares you should buy for that particular stock. So once it actually trade below, the risk is actually, the loss is $500. And of course, there would be some brokerage fees. This is how we manage our risk. The longer you stay in having the capital, you'll be able to learn and see profits. The reason is that most of the indexes are trading on a upward trend. So when an index is on an upward trend and the stock is on an upward trend, the probability of seeing a profitable trade is higher. So I'll go into an example. This is UOB Bank, which is the chart that we see earlier. So I wouldn't share too much. We identify an accumulation phase. So this accumulation was very clean because the moving average did not actually cut through the stock. It just nicely flow below, one of the very rare cases, and the price breaks above and the uptrend has likely to begun. And we make use of, so this is the first setup, and we make use of ATR to trade the trend in between the markup phase. Next example, this is Yangzijiang Shipbuilding. It's mostly in a markup phase, and we trade the swings in between. Price breaks above the gray ATR line, and we close once it breaks below the ATR line. So you might ask, Brendan, can we actually hold on to our trade? Because since it's trading above the 200 days, we can continue to hold until it breaks below. So my reply is that we try not to, because you are combining different strategies together, and this would cause a confusion to our brain. So if it is a profitable trade, you will think that in future by mixing strategies is the way to go. And you start to mix and mix to a point that one would just go in circles and not able to find the trading strategy that suits the person's personality or their trading styles. So I would like to keep it the same trading strategy unless someone is sharing that, oh, Brendan, for Yang Zijiang, I've entered when it breaks the 200 days moving average and I've exit, just for example, here when it closed below 200 days average. Then I think that that's correct because you have followed the same strategy, a trend trading strategy. Price cut above your indicator and it exit below your indicator, that's all right. But if you're executing a tactical trading strategy in between the trend, then we like to keep to it and not to train the strategy. So if the strategy does not work or it does not suit your trading style, we know that this strategy does not work. And it's not that the whole investing community, I come across a lot of times where someone will tell me that they kind of don't look at investment anymore and ask them why. And a lot of times I can see how they mix strategies here and there. So you start with a basic one and you add on, or you could modify but record it so that at the end, we want to find a strategy that's in line with our financial blueprint, our trading personality, and also our lifestyle. So when your personality, your lifestyle is in line with your strategy and the market beliefs, the probability of success is much higher. I'll come to the live examples now. So how are we going to execute a trend trading strategy, a tactical strategy? So here's SIA. So for probably one who says that on the left side, this is our tourist or visitor arrival in Singapore. The blue line is the Chinese tourists and the purple line is the Indonesians, two of our tops visitors to Singapore. We can see that there's a gap pre-COVID and pre-pandemic and post-pandemic. We have a view that the arrival will increase, especially with the upcoming T5 terminal, where SIA and Scoot are the exclusive companies using that new, advanced, attractive, gold class standard terminal. Okay, so it will increase the profitability. And technical wise, whereas SIA earlier, in 2 years ago, we see SIA turning around, we see accumulation and price moving higher, and it kind of rests in a very huge reaccumulation, which is why price actually cuts through. So now it seems like it is challenging the upper boundary of this reaccumulation. So with a recent ATR change, here's a blue line, because I realized that if I use gray, it's a little bit hard to identify. So I use a blue line, there's a recent switch. So we have a tactical position and a view that SIA would expect to trade higher from here. The blue line is our stop loss. So we can see that we make use of 200 days moving average. It's trading higher. We're expecting a markup from here. And the ATR help us to trail this tactical position. Next is Mapletree Pan Asia Commercial Trust. This is an interest rate play. When interest rate increase, it actually impacts REITs and trusts because they lend from the shareholders, unit holders, and they lend mostly from banks to acquire income accretive properties. But when interest rate up, it will be a cost to them or their income. So for the past 1 to 2 years, REITs has been under pressure because of the high interest environment. But when we go to the fixed deposits, nowadays, you know that the fixed deposit rates or even T-bill is less than 2%. The Singapore interest rate and actually the regional interest rate, except for ex-Japan, we are seeing that it should be cooling off. It's not, we are holding. So this is an inverted 2-year yield curve of the Singapore treasury rate. When the treasury rate goes lower, the tendency of REITs moving higher is there. And the price is currently going through an accumulation because it's crossing above. But we see that because of this underlying fundamental reason, there's a potential that the Pan-Asia, Mapletree Pan-Asia Commercial Trust could trade higher. Our stop would be at a gray line of 120. Recently, the stock price is a little bit volatile here because of Trump's tariffs, because higher tariffs has a strong probability of igniting or creating inflations in various countries again. But we shall see, because if US President Trump is to extend the tariff deadline again, then the whole interest environment will start to cool off. So next example is Capital DC. It's quite similar to the SIA. It went into accumulation, a huge accumulation zone, and price moves higher. It goes into a reaccumulation. Now it's actually challenging its high. The stop is at 219, which is our ATR. So as long as the price does not trade below ATR, we have a view that the price could trade higher from here because of the likelihood of a lower interest rate cost and increase in DPU and also its income. So it's trading above the 200 days. We are on a markup. We are on a potential, because we can't use absolute terms here, so there's a lot of potential markup phase. And the price breaking higher from here would see it trading higher as long as it does not break below. If it actually breaks below, then we will hold on and look on for another signal, because this consolidation zone might be a trend, continue to trade further before a breakup, or you just continue to trade in this zone. But currently there are signs of moving higher. So these are some of the examples that I like to share with you. And one last live example is we look at Ping An. Today I was just doing a bit of screening because of a bit of time before the seminar. So this is Ping An. I'll just take out the trend lines. It goes through a accumulation phase, a similar accumulation phase. It traded higher, and then there's a reaccumulation phase. The price is trading above 200. We have a good confidence that the price could continue to trade higher. And when we switch on the adjusted dividend, we can notice that the price again is challenging the top of the boundary. So with the recent China easing supportive, conducive policy, price could trade higher from here. And technically it's above its 200 days moving average, and the price is above its ATR. So we can also gain access. We can gain access to Ping An through the SDR listed on Singapore. The trading code is HPAD. So the price is 412. This is the technical view of the Ping An insurance, where similar again to SIA would break higher. We use the ATR as a trailing stop. So the trade setup would be similar to here, where the price breaks above the ATR upper boundary, over and continue to trade higher. It may not be so aggressive, it may be gradual, it depends on the demand and supply factors. But right now, it seems like, it looks like, and technically shows that there's more demand than supply. So this is a trade setup for 2318, which can be accessed using HPAD SDR listed on the Singapore Stocks Exchange. Okay, all right. I will do a very quick recap of what I've learned, or what we have learned today. That first thing, when we look at the price chart, be it a 15-minute or 1-day chart, we always look at where we are in the price cycle. Are we at a markdown? We're in accumulation, markup, or distribution? So once we have a view on that, we make use of the 200 days moving average to see where we are. So we'll then deploy the ATR strategy at the reaccumulation or the accumulation, but upon break near to the end of the accumulation. So the first is the moving average, and the second is using the ATR. Always know where we are before we deploy our trading strategy. And this is how it looks when you download or you keep the indicator that I share with you in in your trading view. So you can go to trading view under indicators. You can, on the other hand, click simple, because I use ATR, trailing stop, and a bracket simple. You will be able to find the ATR easier, because if I just click ATR, many people has developed different ATR because it's a very useful tool. There's a whole list of ATR, which I find that is still too complex, or I think it take away the basics of technical analysis. So you can just key in ATR and simple, and you will see my name pop up. So this is the ATR that you would like to add to your trading toolbox. TradingView is a free charting tool. You can register without making any payment. It just have some limitations, such as watching more ads, and also you can only apply 2 or 3 indicators on your chart. Okay, so with that, that's the end of my presentation and training session tonight. This is the Pigeonhole QR code. You can take a picture. You can go over there to post your questions. Do join the SGX Invest and sign up for my Gateway newsletter to have a deeper understanding of the stocks and also what's happening on the SGX market. So it's pretty exciting. SGX just break above the 4,000 all-time high. We are now trading above it. Without much selling off below, it means that the market is accepting STI trading above 4,000. We have a view that it could go technically higher from my perspective. So thank you very much again for joining us in this session. You can take a deep breath, relax a bit, and think through any questions. We will now go to the Q&A session. If you think some of the questions are in line, you can actually vote for them. Okay, so let me go to the not trading view, but the Pigeonhole, to see if there's any questions. Okay, so there is 3 questions here. How do we know if a sideways market is a reaccumulation or a redistribution? So this is a good question and a very commonly asked question, because when we look at the chart, let me go to a white screen. We look at the chart, accumulation, markup, and then there's a reaccumulation, just like the SIA. So is this going to go down lower, or is the price going to break higher from here? So this is where we go back to our initial slide. of demand and supply. So if it is a bullish trend, if the price is going to break higher, naturally, when there's more demand, we will see more of the green candles. There'll be more green candles develop towards the end. Okay. My hands is a bit shaky. Maybe I'm also coming to the end of the webinar. Okay, so as the reaccumulation or distribution starts to develop, in the initial part, we may see more red candles, but as the trading range transit, we should see more of such green candles towards the end of the trading range. Then we know that there's more demand than supply. And when there's more demand, the probability of a price breakout is higher. And there's a better chance, or there's a good chance that signal that this trading range is actually a markup phase. So I go back to the Ping An. We look back before, we can see that there's so much sell-off, red bars. We can see red bars here and red bars and keep selling. But if you realize that after this Liberation Day sell-off, there's more green bars. So it also gives us a technical observation that this is more likely a transition from supply to demand dominated trading range. And this is more, it looks more like a reaccumulation than a distribution. And again, it's trading above the 200 days moving average. Of course, things will take sudden turn. We never know that there's Liberation Day 2.0. So all these technical tools are there to help us. If it breaks below, then the view would have changed. So just a very quick one, if it changed and then it traded up, we will, if all is good, we will re-enter the position. If not, we can actually reduce our size when we see such observations. Okay, so now we're seeing more green bars than red bars. More green bars than red bars. Okay, I hope I answered your question. Next, for ATR, how we calculate 3.5. As in my chart, I only enter the period. Okay, so this will need a little bit of coding. So the ATR, and then we will multiply because what you have is the average true range. So we will take the average true range and multiply by 3.5. Mine is open source. You can go to TradingView and save my indicator. You look at the code, you can cut and paste. You can do a ChatGPT conversion of code to your trading platform. And then the ATR should work. If not, you can actually start a free account on TradingView to use this indicator. So the next is what is the parameter used for the single MA, dual MA, MACD, ATR, and Ichimoku Cloud? All these usually will use a standard length. Like for example, the single, we will be using for swing trading, we'll be using a 20 days. But if let's say we are tracking the whole trend, we'll be using the 200 days as we saw earlier. For dual, we'll be using a 20 against 50. So a fast and a slow. So MACD is the standard settings of 12 and 26. ATR, which is the one we use, is a 5-day period. Ichimoku is a standard period also. So you can see if you trade long enough, sometimes you may tilt the moving averages slightly here and there when there's a bit of whipsaw. So I'm just doing an example over here in this distribution phase. If, for example, I'm using a 150 days. So if I use 150 days, there could be some level of whipsaw. Then I would like to change it to 200 days, because once it cuts below, it's more clean to see that there's a change in trend. So you may actually do some tilt. If you see that your moving average actually seems to get whipsaw, like in this case, so you can actually change it to 200. So it's like kind of like a manual optimization, manual machine learning, okay, or manual neural networking uh, to fit to this specific stock only. But in general, we use whole number to test out the trend, and it still will work. And it still will work. All right. So thank you very much again for joining me in today's session. I'll be having another session in September, or look out on my website to see when is my next session. I hope you have learned something tonight, and it helps to complement your trading strategy. So have a very good evening, and thank you very much for joining us today in today's session. Okay, have a great evening tonight. Thank you.